What's up, everyone? My name is Ale. Welcome back to My World of Stocks, and welcome back to my favorite series on the channel where I update you guys on all the stocks that I bought or sold last month, which was, of course, May 2022, and all the stocks that I'm thinking about buying or selling this month here in June. And as of right now, I would say that there are a lot of really good deals in the stock market. Now, I know that there's a lot of concerns going on about the rise of inflation, there's global conflict, there's a possible looming recession. I know that's a big hot topic right now. Everybody's talking about that. And those are all very valid concerns. I think the economy is very shaky to say the least. And trust me, I am more concerned about the macro economy right now than the average person. But as a long term investor, I'm seeing a lot of really good stocks falling by huge amounts. And I just think that there's some great deals out there if I'm really thinking long term and looking forward to what they could potentially be trading at in the distant future. So, as of right now, I think that during the month of June, I'm going to be very active and I'm going to be buying a lot of different stocks. And I'm going to talk to you guys about that in this video. Now, starting with last month though, I actually didn't make as many moves last month as I wanted to just because I had some personal financial things that I had to go through last month. So I wasn't making a whole lot of moves, but I did still buy a couple stocks. I also sold a couple stocks, which is very rare, but I'll talk to you guys about that. And then we'll do that, and then we'll talk about June because June is going to be super active. I'm going to be buying a lot of different stocks in June. I can tell you that right now. But let's go ahead and start with May, and then we'll move on to June. All right, now starting with any stocks that I sold over this past month. Again, this is something that is super rare for me, but I did actually sell completely out of two different stocks last month, and those were AT&T, ticker symbol T, and Warner Brothers Discovery, ticker symbol WBD. But before you assume anything, let me just say that I don't actually have anything against these stocks other than they're just not really a good fit for my portfolio anymore. It's a little hard to explain, but AT&T basically spun off Warner Brothers into a new stock recently, which resulted in them having to cut their dividend by about half, and it made their stock look lower than it really is because of the loss in value of their business. But I actually made a ton of money on AT&T because I had a very low price point on it and I was collecting like a 7% plus dividend for years before now finally selling out of it, which I sold my last few shares this morning at around $21 a share. Warner Brothers is a little different though because I collected those shares from the spin-off and then I sold them very shortly after at around $24 a share back in April. Since then though, the stock has actually fallen a bit below 20. But overall, there wasn't a big reason for me selling out of either of these two stocks other than I just didn't really feel like I needed to own them or I needed what they offered anymore. Originally, I owned AT&T for the massive dividend, but after they cut it in half, it was about the same yield as Verizon, which is a stock that I already own and one that gives me the same type of exposure to the telecommunications and internet markets, but with also the highest quality and customer satisfaction ratings, so I kind of like them a little bit more. Now, AT&T was more diversified thanks to the Time Warner acquisition, which gave them growth in video streaming through HBO Max, but then they spun that off into a new company, which I don't have anything against owning them too, but because I already own Disney stock and Amazon stock, I already have plenty of exposure to video streaming with those massive companies that are also, much larger, more dominant, more diversified. And in my opinion, Disney also has the stronger brands as well. So I just didn't feel that I needed to own either AT&T or Warner Brothers in my specific portfolio anymore. If they fall more, I'll definitely consider buying back in, but for right now, I just don't really need them. Now moving on though to purchases, like I said earlier, I didn't get to make as many moves last month as I wanted to, so June will definitely be a much larger month of purchases for me. But sticking with May for a second, I did pick up some more shares of Google, ticker symbol GOOGL, at right around the $2,200 range. And right here, I think Google is an absolute steal. This is a stock that is currently going through one of its super rare dips that you almost never get to experience. It's currently down over a quarter of its value, which leaves the valuation unimaginably cheap at a PEG ratio of just less than 1. Now that's cheap for any company, but let alone a giant behemoth like Google that dominates virtually every aspect of the internet world, is doing close to $300 billion in sales per year, and yet is still somehow managing to grow by over 15% a year. That is absolutely insane. Google is a screaming buy right now, and I'll definitely be adding more shares here in June. Next up though, another stock that I think is a great value right now that I went ahead and picked up some more shares of last month is Disney, ticker symbol DIS, which, after making a number of really smart acquisitions, has now accumulated some of the world's most popular brands all under one roof, which it is using to fuel virtually all parts of their business, and especially their new video streaming service Disney Plus, which added another 8 million subscribers last quarter at a time when Netflix has actually been losing subs and HBO Max only gained around 3 million by comparison. Yet despite all of their success, the stock is actually flat over the past 5 years and has already lost close to half of its entire value in recent months. I did buy my shares a little lower than where the stock is trading today, but even here, I still think that this is a great value. The other day, I was actually just thinking about how sick I am of all the same shows and movies that keep playing on streaming platforms, but then I remembered that there's the Moon Knight show from Marvel, and there's the new Obi-Wan Kenobi show from Star Wars, and I just had this moment of realization that Disney has something special here with Marvel and Star Wars that really no other company seems to be able to replicate. It really feels like the only things that are exciting to me right now in terms of new content seems to be coming from only Disney. And that's leading to more than 30% revenue growth this year and still another 12% next year as well. That's not too bad at all. All right, next up though, I also purchased some more of Endeavor, ticker symbol EDR, which is the parent company of the UFC. And really that's the only reason I would say that I own them, is just because I want some exposure to the UFC, which I'm predicting will one day be as large as, say, like the NBA or the NFL. But this is a stock that I was actually down on too, so I decided to go ahead and purchase a few more shares at around $19 to lower my cost basis a little. And so far, that's worked out pretty well for me, as the stock proceeded to bounce back a little from that dip to back up to the $20 range again, which leaves me positive on my position by a few percentage points. The stock itself, though, is still down a lot from its highs, but I probably won't be buying any more at this time unless my position turns negative again. It's really just a tiny position of mine at less than like 0.1% of my portfolio, so I still have a lot of room to buy more if it keeps falling, but overall, it's just a long-term bet by me on the future of mixed martial arts and, of course, the UFC. And lastly, the final stock that I purchased in May was just a very tiny amount of Activision Blizzard, ticker symbol ATVI. But this was just really a bet on their acquisition by Microsoft going through. See, Microsoft agreed to buy Activision for $95 a share, but today, Activision stock is still trading well below that at $77 a share because of the risk of the deal, not getting approved by regulators. So I went ahead and bought a few shares at right around that same price. Personally, I've seen much more monopolistic deals go through, so my gut tells me that this one will get approved as well. And I don't seem to be the only one, as even Warren Buffett bought the stock last quarter, and he literally said that it was only because he's betting on the deal getting approved too. Which, if it does, I'll make more than 20% profit on my gamble. So I just think the risk is worth it for me personally. That's it for the month of May though. What about this month here in June? Let's talk about that. Now, I do not foresee any selling here in June because that is something that is very rare for me personally. But I definitely think I'm going to be buying a lot of different stocks this month. So let's just run through some of the stocks that are at the top of my list right now, and then we'll wrap up the video right after. And first up, I'll just quickly mention again that I do plan on buying some more shares of Google stock this month, but I'm also thinking about buying some more of my number one largest stock in Microsoft as well. Just like Google, Microsoft is another massively large company who I especially love for the stickiness of their office productivity software that practically every company out there uses, as well as their high growth segments like gaming with Xbox, video communications with Teams, cloud computing with Azure, and even work networking with LinkedIn, just to name a few. Their financials are insanely strong with over 160 billion in sales and over 60 billion of net income just last year alone, and yet they're still growing sales at close to 20% this year. That's pretty crazy. The stock rarely dips, but it's currently down over 20% from its high, so about a fifth of its value, and is sitting near the bottom of its 52-week range. Dips in Microsoft are almost always a buy, and I plan to take advantage of that here in June as well. Next up though, I'm also planning to lower my cost basis on several speculative stocks that I took a long pause on from buying. You guys probably noticed that in recent videos. I told you I wasn't buying spec stocks for a while. I was focusing on more profitable, safer companies, but we're here in June and these spec stocks are getting absolutely destroyed. So I just want to take this opportunity to dramatically lower my cost basis on virtually all of them because I feel that they have a lot of future potential in their respective markets, and that may also result in large recoveries in their stocks over the long term. So I kind of just want to take this chance. But just to give you some examples here, Palantir is down over 80% from its highs, but it's a great play on the future of defense, data management, and artificial intelligence being used by both the government and the military. I only think that that type of stuff is going to increase in the future. You've also got Duolingo. They're down about 60% from its highs. And this is still a huge play on the future of virtual learning, especially in language and through a simple, easy to use app on your phone that is completely free versus having to pay giant amounts of money to college classes. I think that's kind of revolutionary for them. Scott's Miracle Grow, they're also down over 60% from their highs, but that's a huge play on the future of not just gardening and agriculture, but also on the future of the MJ market, which may see some nice growth over the long term, especially when there's more legalization going on and stuff like that. Plus, they pay one of the most reliable dividends out there that has a very low payout ratio and 12 years of consecutive growth, despite already yielding close to 3% after the stock crashed by so much. So, even if it doesn't, outperform, the rest of the market, you're still getting like a nice dividend, every single year to collect on it. And besides that, there's also Teladoc Health. They're down an unbelievable close to 90% from their highs. And I think at these levels, it's an absolute steal for the world's leader in telehealth, which is a market that I think will be gigantic over the long term. And finally, there's also Robinhood, who admittedly, that one's been looking a lot less attractive recently. Like their business has been struggling, there's been a deceleration in growth. It's very risky at this point. And the stock itself is down almost 90%. But while it may very well be a falling knife, I just think that it's too low right here to ignore for what could be the future leader in mobile investing and a big play on the overall fintech market as well. Besides those speculative high risk stocks, though, giants like Alibaba and Facebook parent company Meta are also looking pretty attractive at these levels. Both companies generate massive profits with close to $40 billion of free cash flow last year alone. And yet, while they are having a downtime this year for their revenue growth of less than 10%, both companies are still expected to recover to double-digit growth the year after, despite their already massive size. And when you look at their stocks, both are getting absolutely destroyed. Now, granted, a lot of that is because of the horrible macroeconomy, which is a very valid concern, but it's also because of issues that I think might be overblown, or I would say they're definitely overblown. In my opinion, Alibaba is down over 70% right now, in large part due to the fear of Chinese regulation as well as the possibility of the US delisting them from the stock exchange. But both of those issues, I think, will slowly go away with time since China has recently said that they need to ease restrictions on their big tech giants and work more closely with US regulators to avoid any delistings from happening. I'm not saying that we should believe or trust the Chinese government, but it's at least a good sign. And at the end of the day, I think it benefits China more to see their companies succeed and be able to compete with their American rivals rather than destroy them into the ground. And on the Meta side, you're talking about a stock that has already lost more than half of its value, in large part due to the fear of them transitioning over to a metaverse focused business. And while I do think that a profitable metaverse venture is still several years away for them, I also think that they see where the future is headed and they're just trying to get a head start on the metaverse market before everyone else so that they can have a better chance of being one of the leaders in it. And with all the cash that they have on their massive balance sheet, I prefer seeing them take a risk anyway and invest in something for future growth rather than, become complacent and just slowly die off as a company without anything new or innovative or exciting, which we've seen happen with many companies in the past. I'm not saying that all of these stocks are going to be long-term winners. I do think that some of them can definitely fail, especially some of the higher risk ones like Robinhood, for example. But these are all tiny positions of mine anyway. So I really just need most of them to be successful long term. I can have a couple fail here and there, but what I'm doing is I'm buying a basket of stocks here that I think are being beaten down very heavily. And I think that a lot of these stocks still have long term potential to turn things around and to see some decent sized rebounds, which could give me some nice profits again over the very long term. So that's kind of what I'm doing here to minimize the risk. I'm buying a basket of speculative stocks, but again, they're all small positions. So I don't want you guys to think that I'm going in heavy. I am going to make a video on my overall portfolio very soon, and we'll talk about how much I have allocated to each stock. But just know that with the riskier spec ones, they're very, very small positions. and I'm spreading it out across a few of them to kind of lower the risk and diversify a little bit. And then I'm hoping that the majority of them are successful long term, and then I can make some nice little profits on them. So anyway, that's what I'm doing with those. But there's of course some safer ones, like I said, Microsoft, Disney. There's definitely some stocks there that are very profitable and that I want to invest more in. So that's what I'll be doing here in June. Those are just my thoughts though. Let me know what you guys have to say down below. What stocks are you thinking about buying? What do you think are some good deals out there? Or do you think that there's just not very many good deals out there at all, and you think that the stock market is headed lower, and so you'd rather be on the sidelines? I'd love to hear your thoughts. I'll try to respond to as many comments as I can. Thank you so much for watching though. I will catch you in the next video. Take care. Bye-bye.